What's going on, everybody? You know who it is. This is Austin, and this is the Austin Smith Real Estate Podcast, where we talk about real estate and we talk about lifestyle. Today's guest, I wanted to bring him on simply because one of the things that usually people talk to me about when getting started in investing in real estate is that they don't have any money, which I understand. But today's guest, who happens to be a hard money lender, he's going to be showing us how we can use hard money in order to fund our investment deals. So now that we've gotten the money part out of the way, there's nothing else that usually is a major burden, and usually people will talk about they don't have enough money or they don't have enough time. Well, today's guest is going to solve at least one of those issues, and now you have one less to deal with. So we're going to talk about what the role of a hard money lender is, what they do, what their responsibilities are, how to find a hard money lender, what you need in order to get funded. And the best part about it is that it's not even usually attached to your credit. You can't beat that. They might look at your score, they might look at your income, but it's the hard money lender that's taking on the risk, which is awesome. We talk about, like I said, how we get funded. We'll talk about, what's, important when you're choosing a lender. And then we're going to talk about what he's seeing other investors do as far as finding deals. A little housekeeping before we get started. If this podcast has added value to you or your business or your lifestyle, please go on to iTunes, leave me a rating and review. I would greatly appreciate that. Let's continue to share this message. And if you happen to know anyone that can benefit by coming onto the podcast, please let me know if they have any insights and experiences that they can share. Let's get them on the show. Gal, guy, doesn't matter. Let me know. So, ladies and gentlemen, without further ado, let's get into the show. Today on the show, we have a very interesting guest, considering the fact I know most of the listeners out here. Lending, financing, finding the money to invest in real estate is one of the hardest challenges that a lot of people encounter as they start to go into the world of real estate investing. And the individual that I'm bringing on this show today, he's going to bring a lot of insight onto how to successfully borrow money for your real estate deals. This guy, he's a good friend of mine. This guy runs 5 real estate networking groups across New York and New Jersey. I've been to a couple of them myself. He definitely brings a lot of heavy hitters out, a lot of individuals with great experience. These groups have over 5,000 members. He's an experienced hard money lender who has worked for some of the top lenders in the area, and now he runs his own business. I wanted to thank Kyle Jasey for taking the time out to come talk to me today. Kyle, what's up, brother? How you doing?
Good, man. My pleasure. Thanks for having me on.
No problem at all, man. I appreciate you taking the time. We're going to jump right into it, man. We're going to jump right into it. So tell us exactly how you got started, because obviously you're a successful individual. You're a successful business person now. I'm pretty sure it wasn't always like that. So just talk to us about how you started and how we actually got to this point where we are now.
Yeah, okay. Start out, I graduated from college 2004. Actually had a poster and t-shirt company that I ran with one of my best friends. So I did that for about 4 years. Actually had the number 1 selling poster in America at one time. But ultimately, we kind of disbanded that company. And then I came back home. I worked in politics a little bit. And then I went to business school. So I got my MBA. And then from there, I was kind of trying to decide what to do. And I talked to a friend of mine who owned a title insurance company. And so I got into title insurance. He needed someone to kind of help with sales and marketing. So I started doing that, and that kind of taught me a bit about real estate. And from there, I moved over to the lending side. I got an offer from a company that did hard money lending. So that's what kind of got me into the space. And so I worked for them for a little bit. And then I went to go work for one of their competitors. And then I decided, I think probably about 3 years ago at this point, to go off on my own and start doing my own thing, doing my own lending. And so I started off with brokering hard money loans, and basically just kind of matching people up with the best lenders for them. And so now I'm kind of set up to do my own direct lending as well. So I do a combination of the direct lending and the hard money brokering.
Awesome. And we're going to unpack that in just a few seconds here, because there's also a platform that you're kind of releasing in the very near future, correct?
Yeah. So this is something I wanted to do for a while, and I'm trying to talk about it a lot. So I force myself to do it. So I'm going to shame myself into it.
Accountability, man. Accountability.
I know. And so the website, it's the idea behind it is it's just basically creating an online buyers list, so that, oftentimes I'll have people reach out to me and they'll say, "Oh, Kyle, I got a deal in New Brunswick. Do you got anybody that buys down there?" And, if I know of someone offhand, then I'll absolutely, send them that way. But otherwise I'll usually tell them, post it on one of my groups. Maybe I'll get a buyer that way or something like that. But, I just felt like there needs to be a place where you can just very easily go and see who's buying in what towns and how many projects they've done. So, you can get a sense at least if they're reliable or not. And so, yes, my beautiful and talented wife has built the site for me. And now I'm working on populating it. So in the next couple of months, I'm sure you'll see a barrage of emails from me just looking for people and trying to figure out where people invest.
That's right, because I actually remember you was telling me about this in the past. Now I know you say your wife is working on the website. Is the website live, or do you know what the name of that website will be, or?
It's not live yet. We're just currently getting people's information, working on populating the site. The site URL, though, is going to be www.buyersbytown.com.
Gotcha. Okay. And just for clarification, this website is for anyone that, might have a deal, they upload it into kind of this portal that now shoots it out to, basically a lot of buyers in a specific area, or, I'm pretty sure there'll be some toggling ways, but it's just for individuals who are either, because it kind of works both ways. If you have a deal and you need a cash buyer, you're able to upload it to this website that will allow you to basically market your property to hundreds, probably thousands of buyers. And then on the other side, if you're a real estate investor and you're looking for deals, you can also go to this website and kind of use this, log into this system where now you have direct access to deals that are being marketed as we speak currently, right?
Yes, that's right. And I'm hoping one of the good things about it is that it's going to be a little bit more targeted, So basically, if you're buying stuff in Maplewood and I'm selling something in Maplewood, I can just go on and see that you buy in Maplewood, and I can just call you up and say, "Hey, I got this property,"
Gotcha. Okay. So let's talk about that. Let's dig into hard money, which is one of the creative financing techniques that investors use in order to, fund some of their projects, fund some of their deals. For individuals, because it always starts with the number one The number one pet peeve that I have, is for individuals to say that they don't have any money. And I'm pretty sure that you get this a lot as well. So a new investor comes, they want to be, the next rehabber. They want to, own a dozen multifamilies so they can feel like, they don't have to lift a finger and everything just comes passively. And the only thing that stops them is, I don't have the money, quote unquote.
Right.
And in this day and age, that's no longer an excuse. And I want to dig into why, because hard money is one of those topics that kind of get overlooked. And the number one, reason why it kind of gets overlooked is because, it's kind of considered like the predatory loan or like the loans with like they're extremely high interest rates. Not even realizing is that hundreds, if not thousands of investors use hard money as part of their go-to strategy. So just unpack what is hard money, how do you gain access to it, what if someone wanted to, and we'll take it step by step, but if someone wanted to use either a little bit of their money or some money, how can they get started using hard money? What is hard money?
Okay, so I'll start with that. So hard money loans are asset-based loans. So it's a mortgage that's on a real property. It's typically short-term financing, usually about a year, sometimes slightly longer, but typical term is like a year. And one of the reasons why you would use it is because, oftentimes I'll talk to new investors and they'll say, why would I pay that? I'll just go to the bank and da-da-da-da. And it's like, look, if you can get the money in the time that you need it from the bank, by all means, like I would never argue against cheaper money. If you have cheaper and more reliable money or equally reliable money, then you should absolutely do that. But the problem is that, if you and I are both real estate investors and we're going to try to buy a property and you say, I want to buy this and I have the money put down, I've got a bank in place and, just give me 45 or 60 days, I'll be able to close on this. Maybe it's 30 days. And, if I say, well, I've got a hard money loan in place and I can close in 2 weeks, if we're both offering the same amount of money, 9 times out of 10 or 10 times out of 10, they're going to go with the guy who can close faster, especially if it's a distressed seller, that sort of situation.
Right.
So yeah, one of the number one things, or probably the number one thing about hard money is just the speed of it. It's just this industry that we're in, real estate investing, happens very quickly, and banks typically just aren't fast enough for most of these types of deals. And so, sorry, what was the next thing you asked?
So we'll segue right into it. So say I'm a new investor. Would you recommend, or, say if somebody makes the decision, hey, I'm going to be a real estate investor, do you think that they should try to solve the money issue first, or they should work on finding the deal first?
Interesting question. I think,
because do you go to the mall to window shop, or, do you go to the mall with the wallet full of cash ready to purchase something? You know what I mean? What do you think?
Right. Well, okay. So what I usually tell people, at my events and when I'm just talking to new investors, I always say, I think the best way to start in the business, generally speaking, is through wholesaling. Basically sending out mailers, finding properties, finding opportunities, selling them to other investors. I think there's a couple of reasons for that. I would just say kind of anecdotally, the people that I see that have the highest percentage of success, like if you take people that start up that just want to be real estate investors or, that want to start with wholesaling, I would say more of those people that start with wholesaling, they seem to have success faster, and it seems to keep them in the business because it's like you've tackled the most difficult thing about real estate investing when you start out, which is finding the deal, And so I think when you start with wholesaling and you start by finding deals and selling them to other investors, then you're immediately in the game. You're learning how to think like a real estate investor, how to analyze deals. And then when you're ready to do one yourself, and even basically you can start wholesaling with almost no money. And so it's a great way to make some money, get into the business. And then that way, when you're ready to go, you can keep one of those deals for yourself. And now you're a real estate investor, and now you're doing that, and you have your own pipeline of deals. Because one of the things I've seen is, I think all businesses, are about relationships, but I think real estate is particularly about relationships. And most people, like, let's say, myself, for instance, if I get a deal, and occasionally deals come across my desk, and I'm not a real estate investor, that's not really what I'm interested in doing. So I'll pass it on to one of my clients, right? And so if I have 2 clients and one's a new investor and one's done 100 deals, I'm probably going to just send it to the guy who's done 100 deals, because I know that he's going to close and I'll be able to make some money in funding it. And that's what happens to a lot of new real estate investors. Is that you start in the business, and it's hard to convince anyone who's a deal provider to give you a deal, because they feel like, well, why would I give it to you when I can just give it to the other person, probably make the same amount of money, and I know that's a sure thing. And so I think that in terms of getting back to what I was saying about starting out, that's what's so great about wholesaling, is that you're not really reliant upon anyone else. You can start off by finding the deals yourself and then marketing them to investors, and kind of get in the game immediately.
Gotcha. So it's taking the action, go out, start to search for deals, right?
Yeah.
Okay.
Well, okay. And so you were asking about money. Okay. So let's say, I do get a lot of people that will come to me. So what I would say is you have to have some money to get started. It doesn't necessarily have to be your money, but you have to have some money. And, I'll get a lot of people that will reach out to me because they'll hear from people like, I'm sold, I can get 100% funding. And it's like, yeah, people say that because they know that's what you want to hear, but in reality, even if someone funds 100% of the purchase and 100% of the rehab of your deal, generally speaking, they're not going to fund the closing costs. They're not going to, there's going to be monthly interest payments. You usually will have to start the construction yourself. Like, you need money to do this business. Occasionally there's lenders that will do joint ventures, but it's really hard to find joint venture funding, unless you're finding private individuals that are putting up their money and partnering with you. It's just most of the people that I've worked with, it's extremely difficult to get joint ventures funded. So generally speaking, you got to have cash.
And it's good that you kind of elaborate on that, because like you said, like you'll see all the gurus talking and it's, flip homes with no cash or credit or anything like that. And it's just like, well, in theory, it could be true, but then right. On a double-edged sword of it, that's where it comes into play, where it doesn't have to necessarily be your money. You're going to need some money. Doesn't necessarily have to be your money, but you're going to need something.
Right.
And at the end of the day, it has to be that good of a deal. And I tell everybody, like, it's not to say that it's not impossible. It's definitely possible. It's just the fact that the deal has to be that good that everyone can win. Because obviously, the more people that you kind of pull into the deal, obviously that pie gets, smaller and smaller. And obviously, the risk that's involved with taking on certain amount of projects, individuals are going to want to see a certain amount of return. And you have to be able to meet that. So, and
generally speaking, I would say if it's that good of a deal, you're not going to get it as a new investor. It's like, how are you going to stumble onto a deal? I mean, unless you're going out and you're negotiating it yourself and getting it yourself, through your own marketing campaigns, it just doesn't play out that way. If it's that good of a deal, it's still going to just be sent to the guys or women that do 1 million deals a year.
So and then we'll talk about, okay, so I'm glad you pointed on that, because I want to talk about finding deals, or what you're seeing out there, that how investors are consistently finding deals. And it seems like the kind of the threshold that you just mentioned, that's something that's like relational, like that's, finding deals within like your own sphere of influence and with your own network. Because if the deals are that good, then obviously the individuals that have found those deals are most likely going to keep them for themselves, or they're only going to shoot them over to the individuals who they know can get the job done. And like you just mentioned, like, unless you find the deal yourself, whether that's through your own marketing efforts or anything like that, it's going to be hard to get, deals constantly coming into the pipeline if individuals do not know who you are, if you're not a big time investor.
Yeah.
So let's go ahead.
Oh, well, yeah. I mean, I can definitely, give you some ideas about the ways that I see people find deals.
Well, we'll go into that later, because right now I want to talk about like the mechanics of hard money, right? So,
okay.
Boom, I find the deal. Found the deal. I've done my marketing. I've spread the word to my friends and family. I buy houses. And somebody came to me and told me, hey, listen, my friend's aunt is in a situation, needs to sell her home quick. She needs to sell it fast. She needs to sell it for all cash. She doesn't want to make any repairs. The home is extremely outdated. Please help me. because that's essentially how all deals get, pretty much started, essentially, and,
Right.
it's solving a problem. So, okay, I found this deal. I know it's a good deal simply because I know that, this particular area, it's very nice area and not the best looking home on the block. So I know there's some potential. So what is my very next step?
So, all right. So let's say, okay, so you've got that. My phone rings. And so the kind of things I'm going to ask at first is, so first I'm going to want to get a sense of what are the numbers of the deal. That's usually the first thing I ask. And so,
and when you know numbers, what do you mean?
So I'm looking for what's the purchase price, what's the rehab amount, and then what's the after rehab value. So what can you sell it for realistically, right? And so based off those numbers, and I'll tell you, I'll go back and talk about it in a second, the numbers, but based off that, I'm going to decide whether or not I think the deal makes sense. And so a couple things with that. First, if it's someone's first deal, I generally don't want to see them spending more than, let's say, $50,000-$60,000 on the rehab portion. So I'm going to want to make sure it looks like something you can handle. Now, if you're a licensed contractor or something, obviously it's a little bit different. But if you're a novice to managing rehabs, I want to see a reasonable rehab for your first deal or two. And so, in addition to that, in terms of the numbers, how the numbers break down, and this is something that I think is really important in terms of whether you're calling me or any other hard money lender, making a good impression with the lender, you want to show that you have command over the numbers. It's like I had someone sending me deals the other day, and he sent me like 3 or 4 emails, and every one, so I'm just like, dude, no, numbers, man. You got to run the numbers. Look at my website. It explains it, And so basically, an easy way to think about it is, as a real estate investor, your purchase price plus your rehab amount should not exceed 75% of the after rehab value. And so that's just like a very quick back of the envelope way to look at it. Now, look, if it's 76%, 77%, it doesn't mean that it's not a good deal, but once you're getting up to like 80%, it's sounding a little tight. And then we start to worry, even if you're willing to put down extra money, we start to worry, is this person going to be making enough money that it's going to be worthwhile for them, And what if something goes wrong? Is their profit going to just be completely erased, And so from a hard money lender standpoint, we generally don't want to see more than 65% of our funds. So we don't want to have more than 65% of the end value into the deal. So if you're going to sell this house for $1 million, the most money a hard money lender is going to give you is typically $650,000. And so that's usually the equation they're looking at. And so that kind of gets us to, okay, how much money does the person need to bring to the deal? So in our market these days, most lenders are funding, 80 to 90% of the purchase price, 100% of the rehab amount. So that means those other funds have to come from you. So you've got to put down 10 to 20% of the rehab amount. But so this is where a lot of people get tripped up, though, because there's loan to cost and then there's loan to value, right? So loan to value points to that number I was just saying, that 65%. So the lender says, no matter what, I can't have more than $650,000 on this $1 million property, right? So I cannot exceed that. Now, as long as I'm not exceeding that, then I'll be able to lend 80, 90% of the purchase price, maybe even 100% of the purchase price, and then 100% of the rehab amount. And so what they don't include, though, typically is, points and closing costs and all that. And I can talk about that in a minute. But one other thing I want to say is 100% of the rehab amount, you got to understand, most lenders will expect you to start the rehab yourself, and then they'll come out and inspect and reimburse you as you go. So you can kind of break it up however you want. Like if it's a $50,000 rehab, you can say, okay, I want to do it in roughly blocks of $10,000. So, and then each time you say, okay, I'm ready to have the inspection, they'll come out and they'll inspect. And if you've done everything that you say you did, then they'll reimburse you. So you also need to have that money. So you got to have your money to put down. You have your money for the closing costs. You also have to have your money to start the construction. And lenders usually want to see that you've got enough money in the bank to make monthly interest payments, and then just a little bit of extra money just in case anything goes wrong.
Gotcha. So
Yep.
got my financing in place. Now, you mentioned that, some hard money lenders, some require 10, 20%. Are you finding, a particular standard, or a better question is, in this current market, is there a certain amount that an individual should be expected to have in order to participate in a deal?
Yeah. So I would say it's hard to put a number on it, an exact number, but I would say you got to be cognizant of the kinds of funds they're going to want to see, like basically that you can cover. I would say, once you have, if you have money for the closing costs and the points and money to start construction and money for the monthly interest payments and money to put down, in terms of the money to put down, I always think it's better to go conservative. So I say, look, come to the deal with 20% of the money down, at least on the purchase price, unless it's like a really small purchase price, in which case they might want to see 20% of the total purchase and rehab or something like that. But generally speaking, if it's 20% of the purchase, if you have that, the good thing about that is that enables you to work with the largest group of lenders, because not every lender is going to like every deal, And one of the mistakes I see people make, especially new investors, is, they'll only have enough money to work with like 100% lender, or they'll only have enough to work with someone who's going to give them 90% of the purchase price. And then when those guys all say no, then they're stuck. And, if you've got something under contract, now you're having to back out of a deal, and now you're hurting your reputation, and people aren't going to want to send you future deals.
Awesome. And then just kind of unpack a little bit more. When I find this deal, I bring it to you as the hard money lender. I say, hey, listen, Kyle, I want you to fund this deal. Do you do you look at my current income from my job? Do you look at my credit? Do you look at what do you look at any of that, or?
Great question. Yes. So definitely look at your income, because we're going to want to make sure that you're able to handle the monthly interest payments. So definitely look at that. Definitely look at your credit history. In terms of credit, people freak out about this. Generally speaking, if you're in the mid 600s or above, you're pretty much good. If you're lower 600s, then it's not necessarily going to stop you from getting a loan. If you're below 600, it's going to be more difficult. You might have to bring someone with you to co-sign onto the loan. It's just, it makes it a little more difficult. So you definitely want to take care of your credit. In addition to that, we also look at background. Specifically, lenders want to make sure, no major crimes, definitely no financial crimes. That kind of stuff can stop a deal from being done. And, as we're saying with the credit thing, it's usually, if it's a good deal, if the deal makes sense for the borrower, then it's usually never a hard no. It can usually be, it would usually be something like, we're a little bit uncomfortable with your credit. Is there someone you could bring that might be willing to partner with you and sign on to the loan? So most lenders that I know are willing to try to work with people and work out situations. I mean, some are more rigid, but most are relatively flexible and tend to have the best interests of the borrower in mind.
Gotcha. Okay. Yeah. So we're going to go right through the process from initial application to funding, just so we can get an idea of that timeline. So
sure.
I bring the deal to you. I fill out the application. You research my background, my credit, my income. You see that I have skin in the game from doing previous deals. And you give you look at the deal, you look at the purchase, the rehab, the ARV, and you're like, you know what, this is a go. What's the timeline from the decision from the hard money lender to lend on the deal to closing?
So typically the way that it will work is the lender will make a decision of, does this deal sound like it makes sense, right? And so then what most lenders will do, if they agree that the deal makes sense, then they'll say, okay, so I think this deal looks fundable. We would like to see an appraisal to confirm value, right? And so then what the lender will do, and see the appraisal is paid for by the borrower. And so they'll say, okay, this is an appraisal company that we use that covers this area. We're going to have them get in touch, or we're going to have you reach out to them. and you're going to give them basically like a scope of work that says what you're going to do to the property and all the, enhancements that you're going to make. And then they're going to give us an ARV, after rehab value appraisal, on the property to tell us what they think it will realistically sell for. And so, that usually takes, I'd say like 4 to 6 days to come back, maybe a week. And so the appraisal comes back, and basically a few things can kind of happen from there. So if it hits the number that you thought it was going to hit and that we thought, it might hit, then everything's good. And we just proceed with everything that we talked about and how we were going to fund it and all that. If it comes in above that, great. It doesn't typically change a lot, but awesome. If it comes in below that, then what the lender will oftentimes want to see is they might want to see you put down more skin in the game, put down more money. If it comes in way below that, then generally the lender will say, look, it doesn't look like it's as good of a deal as we thought it was going to be, on to the next one kind of, which is good though, in that you don't want to do a deal that's not a good deal. I mean, one thing I oftentimes say is a good hard money lender can kind of be your best friend, in that all we do is look at deals all day long, and we're oftentimes, I think, a little bit more objective about deals. I mean, it's how we make money. So we want to fund deals, but at the same time, we don't want to fund bad deals.
Right. I mean, that would be going backwards. So no, completely understand.
Right. Well, and I'll even say, there are deals, like I get deals in front of me sometimes where we'll make money, and we're going to be secure. Actually, I had a deal like this maybe like a week ago where it looked like we were going to make money and be completely secure, but it looked like the person wasn't going to make any money. In fact, it looked like they were going to lose money. And so, we basically had to say, looks like the numbers don't work here. And the person was adamant that they'd make money. And they actually ended up being right once we did some further underwriting. And so now we're moving forward with funding the deal. But, you don't want to be in a situation where someone's losing money. And even if you're going to make money, it's just most of the lenders I've worked with in the past, we want to see you do more deals and, be like a long-term client,
So and it's a perfect segue, because right before we go into finding deals and what you're seeing out there, what separates, how does somebody know if they're working with a good lender? Like, easily someone can go right onto Google, type in hard money lender, and there's, thousands and thousands of individuals that they can choose from. How do they know if they're picking the right lender? How do they develop that relationship so, they can kind of get that treatment that you just gave to, your other client? Because clearly, like you just said, you could have made money on that deal. And because that purchaser wasn't potentially going to be making any money, you're like, hold on, wait, let's review it, because we want this to be a win-win for everybody. Obviously, when you did your due diligence, you found out that everybody was still in the clear. But, how do I make sure I find somebody like that?
I mean, short of just calling me. I would say
call Kyle.
Yeah.
9-7.
Yeah. So I would say definitely talk to other investors, ask around. I tend to like to if I'm brokering something, I definitely like to work with people that I know and that are local, that I feel like are kind of invested in the area. Usually when I hear about people having problems with lenders, they're typically lenders that are from outside of the area, that might not be that invested in the community here. And so, oftentimes what I'll see lenders do is they know that a deal is kind of so-so in their book and it's not quite in their criteria, but they don't want to turn it down. And so maybe they'll kind of string someone along. And, this is an extremely time-sensitive business. And so if you kind of go down that path with the lender, like I get a lot of calls from people that have gone down the path of the lender, then the lender backs out on a totally fundable deal, but maybe it's just not in their wheelhouse, or they don't know the area or something like that. And now you're scrambling. You've got 3 days to close, and you're going to lose a lot of potential money. So Yeah, one of the things I always tell people is I see people get really worked up about, rates and points, and we can talk more about that. But what I always say is, look, if you have a lender that is reliable, that's worth paying a little bit extra, and I'm not saying that you have to.
No, but
generally
it's
you don't.
The cost of doing business, right? Like if you don't have, like, if you don't have this 60, 100, 150, 200, whatever the amount is to do the purchase and the rehab, if you don't have that, then you have to go get that from somewhere. If you have to go get that from somewhere, then obviously there's a cost of business that's associated with it. And the only thing that I tell people, or the only thing when I'm looking at, when I'm looking at deals, and it's just factor the numbers into your analysis. If you still come out with a profit, you still come out with a profit. If not, and if you don't want to go that route, then fine, just raise the capital on your own. But, if you're finding, I consider how many lenders like the well, and all you have to do is just go to the well. If you go to the well with a bucket, you'll be able to get water out of it. But if you go to the well with nothing to put down there, then obviously you're not going to walk away with anything. So just factor the numbers into your analysis. It's the cost of doing business, and it is still quick, reliable cash. And it's a reliable source.
Correct. Yeah, and the reliable, that's the biggest thing. Because, I see a lot of people get burnt out there, and it definitely happens. And, if you think about it versus a contractor, it's like, absolutely you want to work with a good and reliable contractor. But if it doesn't work out, you can still fire the contractor and hire someone new and end up making money. Obviously, you'll lose some money, but you still have your deal and all that. But if you pick a lender that is not reliable, then there's a very high percentage chance that you're going to lose the deal, just completely. Not just that you won't make quite as much money on the deal. It's like you're going to lose it. Like there will be no deal. And then your reputation will suffer. And it's unfortunate. So I think you got to be careful, check reviews online, that sort of thing. But I think the best thing to do is to just talk to other people, see who they use, who they've had good experiences with.
Awesome. Dude. So what are you seeing? Because obviously you deal with a lot of investors, like you mentioned. You're looking at deals day and night. What are some of the strategies that these investors are using nowadays that are finding them these rehab opportunities, or even for the individuals that are maybe looking for their next rental to add to their portfolio? What are some of the strategies that you're seeing? Because you touch base on direct mail marketing. And you've also kind of touched base on working your own spirit, influence, and network. What are the common themes that you're seeing on how these individuals are finding deals?
Yeah, I mean, obviously the marketing, like you said, working with realtors, REO brokers, realtors that are working with the banks. That's a great source of deals. And I would say other investors. Other investors is a great source of deals that people oftentimes overlook, I would say, because it's like once you've established yourself in an area, then people come to you, because then people know that you're someone that can close and you're reliable. And so then you're getting deals. And, oftentimes some of my guys that I work with and people I know that are doing high volume, they'll reach a point and they'll just say, look, I can't do more than 10 projects at once, or I don't want to do more than 10 projects at once. So from there, if I get a good deal, like that pipeline keeps going though. Like even if someone, hits their max in deals, realtors keep sending them deals. And so, they'll say, oh, okay, well, I don't have the bandwidth to do this one myself, but it's a good deal. And so, I'll get it under contract and I'll sell the contract to you. I'll tack a little bit on top. I'll make something, but I'll price it so it's still a good deal for you. So I oftentimes tell people that are trying to get into the business that I meet at my events and stuff. I'll say, look, like find an experienced real estate investor, and there's always some in the room, and just see how you can add value to their business. Say, hey, is there anything I could do for you? Basically in exchange for knowledge. Can I help you out in any way? And they tend to love that. And then you're building a relationship with someone who's had success in the industry. And now, 6 months later, when you're ready to go, they might be the source of your first deal. I mean, I see that kind of stuff happen all the time.
I love it because, like, real estate, and we was talking about this earlier today, like, real estate it's a heavy relationship-driven business.
Right. Because there's no, like I always say, the great thing and the problem with real estate is that there's no barrier to entry,
Right.
And so it means that anybody can just wake up in the morning and be like, I'm a real estate investor, and that doesn't have to mean anything. I always say it's like if you're out in Hollywood and you're like, I'm an actor, and it's like, oh, you're like, what have you been in? Oh, well, nothing yet. And it's like, all right, so you're a waiter. You're just trying to make it like everybody else.
Well, I recorded a few Snapchat stories, like, that's got me on the camera.
Yeah. And so for those of us who've been in the business for a little bit, we all run into these people that come in and they're, I'm doing this, I'm doing that, and blah, 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 blah. And then when you really start getting into the weeds of what they've done in this and that, it's like, okay, like a lot of big talking here, not a whole lot of walking yet, And so I found you learn to avoid those kinds of people. And I think it just kind of makes people wary in general. But once people have kind of seen you be around for a bit and seen you do some stuff, I always say that, your first deal seems to be the hardest to get. But then after that, it's almost like it sends out a signal to the entire real estate community that it's like, oh, this person closes deals. And it's hilarious because I'll see people are like happy, but they're also frustrated because they'll be like, they'll take them a year to find their first deal and they'll be frustrated and this and that, and they'll get it. And then like a month later, they'll get another deal that's even better. And they're like, where was this 6 months ago? And it's like, yeah, it was 6 months ago. You hadn't closed anything, And
that's just,
and actually, yeah.
Because like I was gonna say, like what do you think separates, and obviously that trial period, that year, that's part of the process because we've all been through it, but that part of the process, and it's like what do you think separates the individuals that are your clients that are doing high volume transactions, the 50, 60, 70 deals a year, and the individual who's struggling and maybe decides to give up or maybe starts to plateau only at maybe say 2 deals a year? What do you think is that difference?
Okay, a couple things there. Well, a huge part of it is not giving up, right? Like assuming that you're doing things the right way and you're taking feedback and you're learning and you're improving. It's like what's tough about it is that all along the way, it's like you're climbing this invisible mountain. And so it's like it's hard to see the progress that you're making. And so it's hard to know when you're going to get to the summit, but you are climbing in the way that you're meeting more people and you're building relationships and all these things that you're doing. It's hard to know how tangible they are, but you kind of just have to trust the process that like, okay, like, I'm meeting people, I'm developing relationships, I'm getting closer and closer to finding this deal or someone that's going to send me the deal or something like that. But it's hard in that it's just hard to know how much progress you've made. So oftentimes what I'll see, and this is one of the things I always tell new investors, is it's very likely that you're going to get to a point on the mountain where you think you found your first deal, right? And you might be a year in. And so you're going to be like, this is it. This is the one. And you're all excited. And I get excited by that. I'm like, that's great. Because I've been writing you proof of funds for a year, and so you're excited and all that. And the numbers make sense. And so we order an appraisal and da-da-da-da. And then it doesn't appraise. And you're crushed, But I can't tell you, and a lot of people get to that point and they're crushed and they're just like, I'm out of here. And they give up. Like, because that was it. They put everything into that moment. And I would say that's a big point between failure and success, because the people that can just keep climbing the mountain, it's usually even just like another 4 to 6 weeks that can just kind of keep going. That's where like the real deal is, And that's the one that works, and it's a better deal. And it's just one of those like darkest before the dawn type things. And then from there, it's like that signal gets sent out, and it's like you've gotten to like the land of the deals, you know? And then it's like, you know, you made it to the top of the mountain where there's tons of deals, you know? And now you've got enough connections. You found that realtor, and now they've seen you close. So now they're sending you more stuff. And then someone else hears about you. And then like you're getting a reputation. So now all this stuff's kind of happening. But if you quit at that false peak, if you quit there, then you're never going to be a successful real estate investor, you know? And so you almost kind of need like just this blind faith. Like I always tell people, I'm like, look, if you want to do this business, just decide that you're not going to stop until you do a deal. No matter what happens, you're going to at least do a deal, all right? And no matter how long it takes, whatever. And after you do that deal, then decide if you want to be in the business or not. But it gets so much easier after you do that first deal. And I also say, make sure you don't throw all your money into that first deal, because the second one, then you're like, now you're in the land of the deal. So now it's like a switch is going to flip.
But what if I don't want to go through like that whole entire process of learning and churning and burning and everything like that? Like there's courses, there's gurus that are out here that if I go pay them $5,000, $10,000, $15,000, they're going to give me the secret sauce, and then I just have to do what they do. Like, so why don't I just do that?
Yeah, I would say like, if in listening to my analogy, someone feels like that's not for me, like I don't have that.
That was my entirely sarcastic voice, by the way, because like
right. No,
not to go, but like,
right. No, I'm right with you. And I'm saying, I think if someone listening feels that way, then this is just not for them, you know? And so to your point about the gurus and the education, all that, you know, you're going to go to these things, and I don't want to make it sound like the information at these things, generally from what I've heard, some of them is very good. It gives you, explains to you how the business works and all that. I mean, a lot of it's information that you could learn just from going to like cheap seminars and stuff. You know, there's a lot of free events that go on, there are education things. There's a ton of like everything you need is on the internet. You can go to my website, like not to shamelessly plug my site, but like you can go to my website, KyleHardMoney.com, and I lay out like how to look at a deal and what types of deals get funded and this and that. You can learn everything you need to learn and not spend $25,000 to $40,000. And so the way that these groups will pitch it, and the way that they'll pitch it to you is you go in there and say, look, like, once you get a deal, like, we're here to help you learn real estate. So, like, once you get a deal, he's going to pay for this course. It's like, yeah, if you do a deal, you know, but you're still going to have to climb that mountain. You know, there's no getting around that. So a lot of people, I feel like they come to real estate and they're searching for something different from what they're doing, but they're not necessarily searching for this. And the process of climbing that mountain will make it clear to you whether or not this is for you, right? And that's going to be true whether you spend that money or not, because you're going to have to climb the mountain. And so better to do that with your money in your pocket than without, because all those courses are really going to do, you know, and they'll give you like fancy spreadsheets, like, oh, this is how you present it. And I have clients that do this kind of thing, and like, oh, the spreadsheets, all that stuff, it's nice, not necessary. I would say if you want to do one of those courses, go about the normal way first, do a deal first. I've seen people take their business to the next level by doing courses like that after they've done a couple deals. But, you know, and it's not to say, though, that people don't do these courses and have lots of success and all that. But those people were going to be successful anyway, you know. And there are tons of people out there who go and they spend all their money on this stuff, and then they start climbing the mountain because there's no way around it. And then they realize, oh, shoot, this isn't for me. And they'd have been way better off if they had that money to put into a deal, you know, or partner on someone else's deal. Investors are always looking for gap funding. They're always looking for people that will supply the money that the hard money lenders won't. So you can find some super experienced investor and say, hey, I'll give you $20,000. I'll invest with you. And, you know, you sign a promissory note. I'll make, I don't know, 12% on my money, 15%, whatever we negotiate. And so I can like earn money and learn and hang around the job site, and you'll teach me stuff, and I'm supplying the staff funding for you. So I think that's a way better use of your money.
I love it because it's and you know I and we're gonna even go. I put it like this. I'm gonna bring you. I'm most likely gonna have to bring you on for a future episode, which talks about like building a lifestyle business. Because that right there is kind of the epitome of how many different avenues you can kind of go in the business of real estate. You can be the agent, you can be the investor, you can be the lender, and it's awesome to see that, you know, you can be the investor who, you know, does mainly rehab projects, or maybe you do a bunch of buy and hold projects, and you're still able to get in on a piece of the action without having to actually do that particular project, which is awesome. And that's when you really started to get into, you know, what it is to really have like a lifestyle business. And lending is, you know, one of those vehicles that'll help you get there. So, you know, double backing on the gurus, like what if there was one, because I'm a big fan of Gary Keller's book, The One Thing, that is not because I'm a Keller Williams agent, it just happens to be a damn good book. And like the one thing, so for those listening, what is one thing that they can do over the course of the next month to 3, so next 1 to 3 months, that will help them get closer to landing their first deal?
You know, I never did this until a couple of years ago. But I would say, I would definitely say writing down some goals, I think, is really important. That's made a huge difference in my life. Like, I started working with a business coach, and especially for entrepreneurs, it's just so helpful to have someone holding you accountable. So even if you just start by just, you know, putting down some ideas of like, this is what I want to do by this point, and just start really thinking about that. And then kind of taking out everything else that's not in service of those goals. Because, you know, I find a lot of people seem to do a million different things, you know, like, oh, I do this, I do that. And like, they just chase whatever the new shiny business opportunity is. And I did that too, you know.
Bitcoin, but that's another story. We won't even get into that. I did not. And people knew, like, because I was, you know, heavily active in trading Forex in the past. It's like, well, what do you think about Bitcoin? And what are your thoughts about this? And I was just never, for whatever reason, I was just never a fan of it. And I knew, like, that's when I was really starting to get into the nitty gritty of real estate. And I was just like, I got to focus on one thing, because I know, like, if that and trust me, like, you know, pulling up the charts is going to make me go right back to my trading days. But, you know, I'm like, I got to focus on one thing, because if not, then I'm going to spread myself too thin. And you know, I find a lot of people do that, which is why, and that's the main reason why I kind of asked that question, because, like, you know, what's one thing that kind of will just move somebody forward, so that way, you know, they're not looking at, you know, what this podcast said and then this book and then what, you know, they saw on YouTube, and then now they're trying to put everything together. It's like, what's one thing? And like you mentioned in goal planning, I can't tell you how many times I talk about this in some of my articles, because it's the one most overlooked key habit of extremely successful individuals. And the only reason why is because something happens. Like, you can know, you know, you could set your goal at the beginning of the year and say, hey, listen, like, I just want to, like, I want to flip 10 homes and I'll be okay. And you're like, you can know that that's your goal. You can know that, you know, that it's simple to remember, not a problem. But what happens is, you miss the action part of it at 100%. You miss the action. Now you can have it in your mind like, hey, listen, I want to flip these 10 homes, and that's constantly on your mind, like, totally understandable. But I guarantee that you will not have you will not put in 100% effort with the actions versus if it's actually written down. Something happens in your mind when you write it down and physically look at it on paper. All of a sudden, it becomes a little bit more realer. And when it becomes a little bit more realer in your mind, then the body follows. And now you're putting in that 100% effort in your daily actions, especially like it's a routine for me. Like when I wake up in the morning, I review my goals, because then at that point, that lets me know how I need to set up the day. Because if I win the day, eventually I'll win the week. Eventually I'll win the month. Eventually I'll win the year. But it's writing down those goals. It's such a key overlooked characteristics of extremely successful individuals, and I'm not sure why more people don't do it. Well, I know why people don't do it, because it's easy not to do as much as it is easy to do.
I think it's kind of like, because I did not want to do it for a long time until my coach basically made me do it. But I think that when you do it, it's like, if you don't do it, if you don't set a goal, then there's no risk of failure, right? But if you do, it's like, I have monthly goals for my business, for my loan volume, how much I'm trying to do, right? And when I hit my goal, I'm ecstatic, and when I don't hit my goal, I'm pissed, with myself, and that drives future action, And I think a lot of people, though, they don't want to risk feeling of failure, that regular feeling of like, oh, I didn't hit my goal. But I think the way to look at it is just like, look, like, you're only a failure if you don't do anything about it. It's like, every time that I don't hit my goals, I'm like, all right, what can I do? How can I, how can I work this out? How can I get more loan volume? How can I get more phone calls? How can I, whatever, what needs to be done? And it's just, that's the good thing about having failure as a part of your life, is that it drives your actions.
And I'll say there's one last piece, and then we'll head right into the core four before we start to wrap up. But to piggyback off of that, I think the other kind of secondary characteristic is like setting up those goals. Right. And I tell everybody to do SMART goals, which is, specific, measurable, attainable, realistic, and time-based. And when you attach, I've learned, and this is in my own goal planning, when you attach a number to something, the brain understands it so much more simpler. And not only that, I think what you pointed out was the tracking, the tracking of it. Like, people will play the entire game and won't even look at the score during any point of the game and wonder if they won or lost at the end of the game.
Right.
It's like, you say you have monthly goals. Okay. You want to fund, 10 deals a month. Fine. No problem. Then when you track it, and when you not like you realize at the end of the month, oh, I didn't hit, 10 goals. Like, no, when you write it down next to like what your monthly goals are, and you realize like, oh snap, like I'm not hitting the numbers, like it forces, like you said, like a much more action. And then when you look over the course of 3 months and you're like, damn, like I never got to 10 deals. Like, what the hell am I doing wrong? Then, like you said, it only becomes a failure if you looked at that, understood it, and then did nothing about it. But if you looked at it, analyzed it, like, okay, I see I had, this many deals coming from this source. Let me double down on that. And now you start to learn what you need to learn in order to become better in that specific area. But tracking is so important. Like, you have to look up at the score, and you have to realize whether you're in the first quarter, the second quarter, the third quarter, or fourth quarter. And, it's May now, and we're gearing up. I'm looking at the calendar. June 30th will be halftime, and at that point, you look at it like, am I down or am I up? And that's where games are won. You know what I'm saying? Like,
Right.
that's where games are won. Like, Greg Popovich, Bill Belichick, like, none of these individuals ever won games from playing 2 quarters.
Right.
Like, it's
Oh yeah, it's like, yeah,
it's
a
playing the
90.
game. It's 90
Right.
minutes. It's 90 minutes. It's 48 minutes. It's where am I? First quarter, second quarter, halftime. Make the adjustment to do what I got to do to win the game.
Yeah, it's like June is almost over for me. Like June hasn't even started yet, but it's almost over for me because that's the way I plan my business out.
Right.
And so, over the next 10 days, I will accomplish 90% of what I'm going to accomplish in June. Like everything will be in the pipeline. Anything I can potentially close is already going to be done. And so by June 1st, and even really over the next couple of days, I'm really starting to think of July already. And, what's going to be in the pipeline for July.
Right.
Yeah.
So moving on to the core four, just as we slowly start to wrap up. These questions are designed just to get a chance to learn a little bit more the man behind the machine. So first question, what is your favorite aspect about real estate? Or in this case, since you're on the lending side of it, what's your favorite aspect about lending? Like what draws you out of bed every morning?
I think so. I'll say I didn't. It wasn't deliberate that I chose to go into real estate. It just kind of happened to be having some beers and talking to a friend that had a title insurance company, and then the rest kind of played out as it played out. But I've always liked being an entrepreneur, and I've never particularly liked working for people. So I like being able to do my own thing. I think the thing I like most about real estate is I like helping other entrepreneurs basically make their businesses happen. I like the part that I play in helping people, get their deals done, and especially, it's great with the experienced guys, of course. But it's particularly fun when it's someone that's new and, maybe they were doing something else. Maybe they were doing something they didn't like, and to help someone kind of make that dream happen, and then to see them become hugely successful and all that over the next few years. That's a really, really fun thing. Like I was having lunch with one of my clients and a buddy of mine probably like a month ago or so, and I helped him fund his first deal. And it was rocky. And so, we were going back and forth between lenders and this and that. And we finally figured out a way to get it done. And when I was having lunch with him, he told me, he's like, if I sold everything that I have right now and just didn't do anything else, I'd make over $1 million this year. And I was like, that's incredible. Like you'd love to hear that. It's just great.
That's awesome. That's awesome.
Yeah. Yeah.
Question.
And this guy was, he was like, he wasn't even working at the time. So, sorry, go ahead.
That's
next question.
That's awesome.
Yeah.
Lifestyle business. So, second question, favorite business or personal development book?
I've read a bunch recently. I think my favorite, though, I read back in college, and I think it had a big impact on me. I don't like the title of it, but it's a great book. How to Win Friends and Influence People. You ever read that one?
By Dale Carnegie.
Yeah.
Awesome book.
Yeah, and just great for, how to motivate people, how to manage your relationships with people. And I'm a people-driven person. Like I like people. I like being around people. Which thank God, because I've got 5 networking groups. Although I guess I wouldn't have done it if I didn't feel that way. But yeah. So that book really kind of opened my eyes to just things about the human psyche, just how to work with people, how to get the most out of people, how to inspire people to do better, including myself. So yeah, I don't know that because that was one of the first books like that I read. and it was also one of the best, and just probably had the biggest impact on me.
No, it's a great book. I remember I first read it when I was first getting started in the business, and it's very informative of how to communicate with people. Because it's the simple fact that most people, and the subject theme is just, hey, listen, most people are thinking about themselves. So based on what you said, like it's easy for someone, like you can't change someone, but you can make them want to change themselves.
Right. Like you need to be able to communicate with someone in a way that they're going to be willing to listen to what you're saying,
And not
there's a lot of ways
be able to take and not be able to take offense to it. You might be deep down inside, at least, and like, listen, I need you to get your shit together. But know how you say it, and it's all about how you say it. You can also deliver that message to the point where it obviously gets that individual to do what you needed them to do. Like there's such an easier way to say it. And a lot of the times, like we take it, and especially emotionally, we take out and a big portion of the communication is tone, so having the right tones. We can go into that. That's a whole nother topic, but great book. Definitely recommend it. I have it on my bookcase, my bookshelf. Awesome book. Okay. What are some of the fun things that you like to do in your spare time? And I'm going to talk about it. So talk to me about being able to travel yearly, or at least every year you're able to at least take off a solid month to go travel somewhere. Aside from that, tell me about some of the other things you like to do in your spare time.
Let's see, what do I do? Yeah, I don't know. I live in Jersey City, so I really huge fan of Jersey City. I like it a lot there. I do normal stuff. I like to go to restaurants and that sort of thing. Got a dog. I don't know, like dog sitting right now. So I've got like 2 other dogs at my house. That's why I couldn't do this there. So I don't know. I do that. I've got a great group of neighbors that I'm really close with. My wife and I are really close with. And so, it's one of those, like, we all go to the local brewery every Friday after work. And, it's very cool. We kind of found a nice life there. And so I really like that. I'm big into family stuff. I have a lot of family in the area. And so we get together at least twice a month for like Sunday dinners. So, and pretty much always have. So I do a lot of that, I'll, go see my nephew and my niece play sports and that sort of thing. I don't know, I like,
man.
Yeah, nothing too crazy. I'm trying to learn how to play guitar. I don't know how well it's going, but
that's awesome. So, it's the simple things. Good. And the very last question, where can people find you at?
So the best place to start would be just my website. It's www.Kyle, my first name, Kyle, hardmoney.com. And then also, as I was saying, I run a bunch of real estate networking groups. I do one in Jersey City, one in West Orange, one in Asbury Park, one in Brooklyn, and one in Manhattan. So they're all on meetup.com. You can also find links to them on my website. So if people are investing in any of those areas or interested in investing in any of those areas, that's a great place to find me. Or go to my website to find the groups. They're all once a month.
Go on Meetups, telling everybody, go on meetup.com, flippers and funders. It's definitely great networking events. They happen all throughout the course of the month. There's more than enough for you to attend. You will definitely find business if you go to these events. I'm talking from experience. My very first investor that I worked with, I met at a flippers and funders event. She was flipping a property that me and her worked on together to get it sold. You will definitely find business there. I've met a couple of other network individuals that I still keep in contact with to this day. So definitely check it out.
I should actually say, yeah, I was really impressed. I remember when I first met you, I was like, oh, this guy seems like a good dude. I think you went to Seton Hall, right?
Yeah, I did. Yeah, Seton Prep.
Yeah. I remember. I didn't like that, but I was like, oh, he seems like a good dude.
Did you go to? What high school?
I went to Columbia.
You did go to Columbia.
Yeah. And so I was like, yeah, aside from that Seton Hall prep thing, he seems great. And I remember because you called me the next day, and I was like, oh, it's a good business move, to call the guy that like runs the event. But then you were like, and then I realized at some point that you were like, oh yeah, so what do you do, or what? You asked me some question. I was like, wait a second, like, are you just calling everybody that like you met last night? And you're like, well, yeah. I mean, I forgot that you were the one. I was like, wow, man, that's great. This guy's going to be successful. That's funny.
Forgot. I was just running through that entire list, and I remember that conversation because then we wound up meeting with our other colleague in my office, kind of the days following. But I remember I came home with a list, and I was just like, listen, I'm just going to run through this entire list. I'm going to ask them what they do, and I just went straight through it. So that's pretty interesting. And now we're here.
Love it.
You'd be surprised, man. So, and I got to send some more deals your way because I definitely got to ramp up, my marketing and my efforts. That's for fact. And more currently on the residential side, using that money to kind of fund into the investment side. So I definitely expect a lot of good things going forward, especially now that freaking this year is the 1 year that made me quitting my job 2 years ago or a year and a half ago all worth it. Cause, like you said, it's the process. And that first year wasn't pretty. The following year and a half wasn't pretty either. And now this third year is like, oh yeah.
Yeah.
You know what I mean? So now it's like,
I completely feel you.
Now, like, the opportunities are starting to open up a lot more. And now, like, you can throw a little bit more money into marketing and this and that. So, like, it's pretty awesome. It's pretty awesome. Kyle.
Actually, can I throw in one last plug?
Oh, yours, go.
I think you might have him on. We were talking about it, my buddy Jason Dukes. I hope you do. He's my business coach. Dude changed my life. I love that guy. So I hope you have him on for everybody because I think they'd enjoy it. But this has been a lot of fun, man. I really appreciate this.
No, absolutely, man. Jason Dukes, I definitely will be reaching out to him because I definitely would like to bring him on here just off of exactly what you said, just business coaching. And I'll need him exactly for a mindset episode because I think that's like another key ingredient that, a lot of individuals miss, or that they're just going to like wake up, like you said, declare themselves as a real estate investor. And all of a sudden they're just going to start banking in profits, which, is what most people think is going to happen. And obviously we all know that it doesn't happen like that. So I definitely will be in contact. And I thank you for making that plug because I definitely want to have him on the show, him and Gerald, but that's another story. But
Gerald's the man.
I can't wait to have him on. But
that guy's, he's my hero.
No, he's awesome, man. I can't wait to bring him on. So we'll have to set that up. But Kyle, man, definitely wanted to thank you for taking the time to kind of share some of that expertise, share some of that insight with us. It's definitely a lot clearer, how hard money works, especially for individuals that they've heard the term before. They know that there's other alternatives out there, but they just don't know what route to go. They don't and I tell everybody, don't worry about how to get from A to Z, just A to B. And then C will reveal itself, and then D will reveal itself. Cause they get so caught up on the deal and money and everything. It's just like, whoa, slow down. Run your own analysis first. If it looks good to you, then your very next step, your only very next step is to contact a hard money lender. That's it.
Yep.
That's it. From there, that will slowly reveal whether this is a good deal or not. But just take the very next step. They're already on to okay, well, what tile do I pick out to make sure that it sells for the highest? And it's like, well, slow down. Just hit.
You'll figure it out. Yeah.
You'll figure all of that out. Just fill out the application. Allow the hard money lender to let you know whether this is a good deal or not. And then take it from there. So, awesome. Appreciate you, brother. Is there anything else that you wanted to throw out there? Or is there one last question that maybe I didn't ask that, you feel as though should be portrayed?
No, man, I think we're good. I'm happy. We covered a lot of good stuff, I think. I hope people like it.
No, that's all that matters, man. Kyle, I appreciate you, brother. Thank you for taking the time.
Thank you, man.
Awesome.